Trade It with Scott Bauer standing by, CEO of Prosper Trading Academy. Scott, you want to roll the dice on a cloud company at a moment when cloud stocks are getting thrashed?
I sure do. And let me just start by saying here, full disclosure, we already have here some short option positions. So full disclosure going into our discussion here.
So you're already short.
We already have some put spreads on, yes.
All right.
Yes. Not short the stock, but just some short delta option positions.
Okay.
So when I look at the chart here, I agree with everything that Ken just said in terms of market maker move being right around almost 10%, about $22 or so. I agree with where the 200-day moving average was up top a little bit, which did not hold. It was support for a while, and now, in my opinion, is going to be some pretty massive resistance. And I also agree with kind of that 210 target to the downside. So it's kind of easy to read the technicals here. I just think that investor and consumer sentiment is wildly bearish at this point here. So I'm looking to take advantage of a continuation to the downside here, but I'm doing it with a full risk-defined option spread. So if I'm wrong, I know what my risk is, Oliver. So what I'm doing is I'm buying the December 17th, 220, 210 put spread, $10 wide, pay about $2.50 for that. If I'm wrong, okay, that is my risk. I know completely defined what my risk is, but I'm targeting that downside market maker move area of around 210 as the potential full maximum payout on this put spread.
Okay, so 220 and 210, selling the 210s. Now, Scott, if this thing does start to really get hammered, how do you then go about that? Do you take profits, put on another one, as the spread will limit your upside as this thing falls apart? If it does, do you get more bearish? What's the plan if the downtrend extends?
So yes, this can max out at a value of $10. It can never be worth more than that, even if the stock were to go to 100 or zero. And if I pay $250 for that, my maximum potential profit is $750. What my philosophy is, Oliver, on a strict earnings type of position, which this is, I always look to pretty much just take the position off afterwards, because you get the move on earnings because there's some fundamental news that's coming out now. And as a trader with a very short-term mindset, I would take my profits off, move on to the next trade. I'm not necessarily looking for an extension to the downside.
Okay, it's not like you got a vendetta against DocuSign.
Not at all.
You're just going with the movement, not necessarily expressing some ballistic fundamental view.
Not at all. Exactly. Okay. This is a trade. This is a earnings trade. It's not an investment. You got to have the mindset, if you're going to be a trader, to be able to separate a trade from an investment, and this is exactly what that is.
Okay, that's what we like you for, Scott, keeping that objectivity in the approach to trading. We'll say that right now, even with software firm on the day, DocuSign just marginally lower, so it's looking pretty weak relative to peers going into the report. Thank you, Scott, with the put spread owning some downside going into DocuSign. CEO of Prosper Trading Academy. Thanks to our own Ken Rose for the technical look.